If you're emotional, trading will punish you. Not in a dramatic way, not all at once, but precisely, patiently, repeatedly. The punishment doesn't arrive like an explosion. It arrives like erosion. A little hesitation here, a slightly wider stop there, one extra trade you didn't plan for, one decision you justify instead of own. You don't even feel like you're doing anything wrong. That's the most dangerous part. Picture this. You're alone at your screen. The room is quiet except for the faint hum of electronics. Price is moving, not fast, not slow, just enough to hold your attention. Your setup forms. You've seen this before. You've traded it dozens of times. Your plan is clear. And yet, you hesitate. Not because the setup is invalid, not because the rules changed, but because the last trade hurt. You feel it in your chest before you recognize it as fear. Your mouse hovers, your breathing changes. You tell yourself you're being cautious, that you're waiting for confirmation. But what you're really waiting for is emotional permission. Price moves without you. Now frustration creeps in, not explosive anger, quiet irritation, the kind that tightens your jaw, the kind that whispers, "I knew it." You enter late. The trade doesn't feel right anymore. You watch every tick. Your stop suddenly feels too close. Your target feels unrealistic. You're no longer trading structure. You're trading relief. This is where punishment begins. Not because the trade loses, but because your behavior changed. The market didn't do anything to you. You did. Most traders never notice this moment. They remember the loss, not the emotional shift that caused it. They remember the red number, not the hesitation that set it in motion. Trading doesn't punish emotions directly. It punishes the behaviors emotions create. And emotions don't announce themselves as enemies. They arrive as logic. Fear disguises itself as prudence. Greed disguises itself as confidence. Hope disguises itself as patience. Anger disguises itself as urgency. Each one sounds reasonable in your own voice. That's why emotional traders swear they're rational. Now imagine another moment. It's later in the week. You're down slightly, not enough to panic, but enough to feel it. You tell yourself you're fine. You tell yourself you're sticking to the plan. But the chart feels louder today. Every candle seems meaningful. Every small move feels like it's speaking directly to you. You zoom in, you zoom out, you switch time frames, you search for something, anything, that tells you what to do. You weren't supposed to trade this session, but you're here. You convince yourself that being present is being professional, that watching is learning, that one small trade won't hurt. And when you take it, there's a brief rush. Your nervous system relaxes for half a second. That relief is what you were trading for. Not profit, not execution. Relief. The market collects its fee later. Emotional traders think the market punishes mistakes. It doesn't. It punishes patterns. One emotional trade means nothing. 10 emotional trades reveal behavior. Behavior is exploitable. You don't need to believe the market is watching you for this to be true. The math alone does the damage. Emotional decisions distort risk-reward, timing, and frequency. Over time, the edge dissolves. What makes this brutal is how subtle it is. You don't blow up immediately. You don't crash spectacularly. You slowly lose trust in yourself. Your journal fills with almost trades. Your statistics blur. Your confidence becomes unstable. One good day makes you feel invincible. One bad day makes you question everything. This emotional volatility becomes your real drawdown. Now imagine a different internal scene. You take a clean loss, perfect execution, no mistakes. And yet your mood drops. Not because you broke rules, but because you felt something leave. Expectation, momentum, hope. You stare at the screen longer than you should. You replay the trade in your mind. You imagine alternate entries, alternate exits, alternate realities where the trade worked. This rumination is emotional residue. It sticks to the next decision. The next setup appears, and even if you follow the rules, your timing is off. Your size feels wrong. Your conviction is diluted. You don't realize it yet, but you're no longer neutral. Neutrality is fragile. Emotion contaminates it easily. This is why emotional traders feel like they're always slightly off. Not catastrophically wrong, just misaligned enough to suffer. The market punishes misalignment mercilessly, because misalignment compounds. One small emotional decision leads to another. You don't notice it happening. You just feel more tired, more tense, less clear. Trading starts to feel heavier. You wake up already thinking about the market. You check charts reflexively. You can't fully relax because something unresolved lingers in the background. That unresolved feeling isn't about money, it's about control. Emotional traders crave control because uncertainty feels threatening. The market is pure uncertainty. Every trade is an agreement to accept that, but emotional traders don't accept it. They negotiate with it. They bargain. If I wait a little longer, if I move the stop just this once, if I size up because I'm confident, each negotiation is a surrender of objectivity. And objectivity is the only shield you have. The market punishes emotional traders because emotion narrows perception. You see what you want to see. Fear highlights risk. Greed highlights reward. Hope highlights possibility. None of those are lies. They're distortions. The market doesn't operate on distortion. It operates on probability. Probability doesn't care what you feel. It only responds to how consistently you behave. Now imagine the moment where it really turns. You've had a rough stretch. Nothing disastrous, but enough to irritate you. You tell yourself today is a reset, fresh start. Your first trade loses. You feel heat rise in your chest. Your mind races, not forward but backward. You replay the loss. You feel wronged. You feel behind. You take another trade sooner than planned. It's not terrible, but it's not great. You tell yourself you're being aggressive. You're not. You're being emotional. This is where punishment accelerates. Not because the market knows you're emotional, but because emotion compresses time. You stop thinking in sequences. You start thinking in moments. You need resolution now, and the market charges a premium for urgency. This is where accounts die, not in one blow, but in clusters of emotional decisions stacked too close together. Later, when you look back, you won't remember the emotions clearly. You'll remember the results. That's why emotional traders misdiagnose their failure. They think they lost because the market changed, because volatility increased, because their strategy stopped working. But the strategy didn't fail. They did. Not morally, not intellectually, behaviorally. This is the punishment nobody warns you about. Trading doesn't just take money. It exposes you to yourself under pressure. Every unresolved emotional pattern you carry into the market will be activated. Impatience, need for validation, fear of loss, fear of missing out. The market doesn't cause these. It reveals them. And until they're resolved or rendered irrelevant, they will cost you. Again and again and again. This is why trading is not hard for beginners. It's hard for intermediates. Beginners don't feel enough yet. Intermediates feel everything. They know just enough to be invested, but not enough to be detached. That's the most dangerous place to be, because emotion plus partial skill is lethal. The market punishes emotional traders not to teach them pain, but to force evolution. Either you detach, or you repeat. And repetition is expensive. The next part is where we confront the lie most traders believe about emotional control and why trying to master your emotions actually keeps you trapped. Most traders believe emotion is something to be controlled. They imagine discipline as a clenched fist. They imagine calm as suppression. They imagine mastery as never feeling anything at all. That belief quietly ruins them, because the harder you try to control emotion, the more power you give it. Picture this moment. You're in a trade. Everything is technically fine. Your entry was clean. Your stop is placed where it should be. Your target makes sense. But inside, something feels tight. Your eyes flick to the P and L, then back to price, then back again. Your breathing becomes shallow. You're not panicking, but you're not neutral either. You tell yourself to relax. That command does nothing. You remind yourself of your rules. That reminder adds pressure. Now you're not just trading, you're monitoring yourself trading. Every thought becomes another thing to manage, another layer of tension. This is emotional control in action, and it's exhausting. The market punishes this state because divided attention is expensive. When part of your mind is managing emotion, it's not observing structure. When part of your mind is suppressing fear, it's not reading context. You're slower, less precise, more reactive. You don't notice it in real time. You only feel it afterward when you look back and think, why did I do that? This is where traders misunderstand the problem. They think the mistake was emotional, so they try to control emotion harder next time. The cycle tightens. Control creates resistance. Resistance amplifies pressure. Pressure intensifies emotion. And the market keeps charging you for operating under strain. Now imagine a different internal scene. Same setup, same conditions, same risk. But this time, there's no internal negotiation. You place the trade. You lean back. You don't watch every tick. You don't feel the need to interfere. Not because you're confident, but because there's nothing left to decide. This is emotional irrelevance, not calm, not bravery. Irrelevance. Emotion hasn't disappeared. It simply doesn't matter. The difference between these two traders isn't mindset, it's structure. The emotional trader is still deciding during the trade. The neutral trader decided before the trade. Emotion only influences decisions when decisions remain open. That's the key most people miss. You don't control emotion by fighting it. You render emotion powerless by closing decisions in advance. This is why emotional traders suffer even when they know better. Knowledge doesn't remove emotion. Only pre-commitment does. The market punishes emotional traders because they leave doors open. Open to doubt. Open to hope. Open to fear. Open to interference. Every open door is an invitation for emotion to enter. Now let's be honest. Most traders like those open doors. They call it flexibility. They call it discretion. They call it adapting to context. But what they're really protecting is the ability to react. Reaction feels alive, and the market charges heavily for it. Think about the moments you regret most in trading. They weren't moments of ignorance, they were moments of override. You knew what the plan said, you knew what the statistics showed, but in the moment, you felt something. That feeling convinced you that this moment was different. It never is. Emotion always tells the same lie. This time matters more. And the market punishes that belief relentlessly. Because probability doesn't work on moments, it works on sequences. Emotional traders collapse sequences into moments. Neutral traders expand moments into sequences. That difference determines survival. This is why emotional traders often say, I trade worse when I care. They think caring is a virtue. In trading, caring is a vulnerability. Caring narrows focus. Caring accelerates time. Caring creates urgency. Urgency destroys process. The market punishes urgency because urgency creates predictable behavior. Predictable behavior is exploitable. You rush entries, you force exits, you increase size, you compress timeframes. Every urgent decision shifts odds against you. Not because the setup changed, but because you did. Now consider the exhaustion that comes with this. Trying to control emotion requires constant vigilance. You're always on guard, always watching yourself, always correcting impulses. That's not discipline, that's survival mode. And survival mode degrades over time. Your nervous system wasn't designed to stay activated indefinitely. Eventually, fatigue wins. When fatigue wins, discipline collapses. That's when emotional traders implode, not because they lost skill, but because they lost capacity. The market punishes fatigue without mercy. It doesn't wait for you to recover. It doesn't pause when you're tired. It doesn't care that you need a win. Fatigue makes emotion louder. Emotion makes behavior sloppy. Sloppy behavior gets punished. This is why emotional trading feels like fighting gravity. The harder you struggle, the faster you fall. The solution isn't more effort, it's less friction. And friction only disappears when emotion no longer has authority over decisions. This is where traders must confront an uncomfortable truth. You don't trade better by becoming emotionally stronger. You trade better by becoming emotionally irrelevant. That means trading small enough that outcomes don't matter. Trading rules tight enough that discretion disappears. Trading infrequently enough that boredom replaces urgency. Boredom is not a problem. Boredom is protection. The market does not punish boredom. It punishes stimulation. Emotional traders chase stimulation because stimulation feels like engagement. But engagement is not alignment. Alignment feels dull. Alignment feels repetitive. Alignment feels uneventful, and that's exactly why it works. This is where many traders quit, not in anger but in disappointment. They finally approach emotional neutrality, and they don't like how it feels. They say, trading feels dead now. They say, I've lost my edge. They say, I'm not excited anymore. They don't realize they've just removed the thing that was hurting them. Emotion didn't disappear because trading stopped working. It disappeared because trading stopped needing them. And that emptiness scares people, because emptiness removes identity. If trading no longer gives you emotion, then what is it giving you? The answer is uncomfortable. It's giving you results without drama. And drama is what most people confuse with meaning. The market punishes emotional traders because they confuse meaning with feeling. They want trading to feel important. The market doesn't care how important it feels. It only cares how consistently you behave. This is the pivot point. Either you accept emotional irrelevance, or you keep paying for emotional involvement. There is no third option. The market will not negotiate with your nervous system. There's a moment that arrives quietly, almost politely, and it's the moment that ends more trading careers than panic ever did. It happens after emotional control starts to improve. You're no longer reckless. You're no longer impulsive. You're no longer sabotaging yourself in obvious ways. On the surface, it looks like progress. Inside, something feels off. Picture this. You've been disciplined for weeks. You've followed your rules. You've avoided low-quality setups. You've reduced size. You've waited. You've walked away when nothing was there. Your account is stable, not exploding upward, not bleeding downward, stable. And that stability feels unsettling. There's no rush, no drama, no emotional spikes. Trading sessions pass quietly. Some days you don't trade at all. You tell yourself this is good. But a thought starts creeping in. Is this it? That question is poison, not because it's irrational, but because of what follows it. You begin to wonder if you're being too conservative, too cautious, too restrained. You look back at charts and see moves you didn't catch. You imagine profits you could have made, and your mind reframes discipline as limitation. This is where sabotage returns, wearing logic as a disguise. You don't break rules dramatically. You bend them intelligently. You take a setup that's close enough. You enter a little earlier for better risk. You hold a little longer to let it work. And sometimes, it works. That's the most dangerous outcome of all. Because now emotion returns, not as fear or greed, but as confidence. Confidence whispers that you've earned flexibility, that you've matured past rigid rules, that you can trust your intuition now. This is the moment the market is waiting for, not because it's watching you, but because your behavior just became predictable again. The punishment that follows doesn't feel like punishment. It feels like a slow leak. A few losses that shouldn't have happened. A few winners that turn into losers. A few small mistakes you brush off. But the internal state changes. You start watching trades again. You start caring again. You start checking P&L more often. Emotion is back in the cockpit. Most traders never recognize this relapse. They think they're leveling up. They think this is advanced trading, less rigid, more adaptive. But adaptation without structure is just reaction with a better story. The market punishes this stage brutally, not with chaos, but with disappointment. Trades stop feeling clean. Results become inconsistent. The clarity you worked so hard to build begins to blur. And the most painful part? You can't blame ignorance anymore. You know better. That knowledge turns every mistake into self-betrayal. Now trading hurts in a different way. Not sharp, dull. You feel frustrated with yourself. You start thinking you're regressing. You replay trades not to learn, but to punish yourself mentally. This is emotional residue returning. And emotional residue contaminates future decisions just as much as raw emotion does. Here's the truth most traders never hear at this stage. The hardest part of trading is not controlling emotion. It's tolerating lack of stimulation. The human nervous system is wired for reward loops. Emotional highs and lows create engagement. When those disappear, the brain interprets it as loss, even if performance improves. That's why emotional neutrality feels like something is missing. And that perceived absence pulls traders back into emotional behavior. The market punishes this because emotional behavior always increases variance. Variance increases drawdowns. Drawdowns revive fear. Fear revives urgency. The loop restarts. This is why traders cycle for years between chaos and control. They touch stability, then sabotage it because stability doesn't feel like success. They mistake excitement for progress. The market punishes that confusion endlessly. Now imagine the internal monologue during this phase. You're sitting at your desk, charts open, nothing happening. Your plan says no trade. You agree with it intellectually. But emotionally, you feel restless. Your mind starts scanning for justification. Maybe I should zoom in. Maybe there's something forming. Maybe I'm missing context. This scanning is not analysis. It's discomfort-seeking resolution. And resolution often comes in the form of action. You take a trade, not because it's good, but because you want the session to mean something. That trade becomes the seed of the next punishment. Not immediately, not dramatically, but inevitably. Because now, you've reattached emotion to outcome. Even if the trade wins, the damage is done. You taught your nervous system that boredom should be solved with action. The market charges interest on that lesson later. This is where many traders quit, not because they're losing badly, but because they're tired of cycling. They say things like, "I keep fixing myself, but I always end up back here." That's not failure. That's misunderstanding the real challenge. The challenge isn't discipline, it's identity. Who are you when trading doesn't excite you? Who are you when results come slowly? Who are you when there's nothing to do? Most traders never answer those questions honestly. They use trading to fill emotional space, to feel productive, to feel sharp, to feel in control. The market punishes that use relentlessly. Because trading is not a substitute for emotional fulfillment. It is a system that rewards consistency over time. If you ask it to do anything else, it will charge you. The traders who survive this phase do something subtle but radical. They stop asking trading to entertain them. They stop asking it to validate them. They stop asking it to feel like success. They accept that trading, done correctly, is emotionally anticlimactic, and that acceptance removes the last hook emotion has. Once emotion loses novelty, it loses power. You no longer chase it. You no longer miss it. You no longer try to recreate it. And that's when emotional neutrality stops feeling empty and starts feeling freeing. Because now boredom is no longer a threat. It's a signal that you're aligned with process, aligned with probability, aligned with reality. The market stops punishing alignment. It has nothing to punish. When emotion finally quiets down, losses take on a different shape. They don't hurt the same way anymore, but that doesn't mean they stop being dangerous. In fact, this is where losses become more deceptive than ever. Picture this moment. You take a trade exactly as planned. Clean entry, correct size, stop where it belongs, no hesitation, no interference. The trade loses. You exhale. Not because you're relieved, but because nothing inside you panics. You tell yourself, good trade, valid loss, and it is. But then something subtle happens. You keep thinking about it. Not obsessively, not emotionally, just curiously. You replay it once, then again later. You wonder if there was a slightly better entry, a cleaner exit, a way it could have worked. That curiosity feels harmless. It's not. Because curiosity without boundaries turns into reinterpretation. And reinterpretation opens the door to emotion again, quietly. The market punishes traders who reinterpret losses not because reflection is bad, but because reflection can slowly mutate into doubt. Doubt doesn't scream, it erodes. You take the next setup. Same rules, same structure, but your execution is a fraction slower. You hesitate a beat longer than usual. You don't even notice it. That hesitation slightly worsens your entry. Your risk-reward shifts. The trade feels tighter, less forgiving. And now, even though you followed the rules, the outcome feels different. You didn't break discipline, but you diluted it. This is where traders misjudge what neutrality actually means. Neutrality doesn't mean analyzing every loss until it makes sense. Neutrality means accepting that some losses teach nothing. Emotional traders believe every loss must be explained. Professional traders know some losses are just the cost of participation. The market punishes emotional attachment to losses because attachment always leads to optimization in the wrong direction. You start optimizing for comfort instead of expectancy. You move stops to avoid pain. You tighten entries to feel precise. You pass on trades that look too similar to the last loss. And just like that, emotion is back, wearing the mask of improvement. This is where many traders unknowingly sabotage a working system. They think they're refining it. They're not. They're emotionally editing it. The market punishes emotional editing because it breaks statistical integrity. Probability only works when variables stay consistent. Every emotional tweak, no matter how logical it sounds, adds noise. And noise is expensive. Now imagine the internal dialogue during this phase. You're calm, focused, disciplined. But underneath, there's a faint desire for reassurance. Not excitement, not thrill. Reassurance. You want to know that this system is really working, that you're on the right track, that the pain has a point, and the market offers no reassurance. It just keeps delivering random outcomes. This randomness feels fine at first, until you start craving confirmation. That craving is emotion, and the market punishes it by stretching time. More losses, more chop, more waiting. This is where impatience returns, not explosively, but philosophically. You start questioning the process itself. How long should this take? What if this edge is weaker than I think? What if I'm just treading water? These questions aren't irrational. They're emotional responses to uncertainty. The market punishes uncertainty-driven decisions just as harshly as fear-driven ones, because both distort behavior. You trade less, but when you do, you care more. You wait longer, but your expectations rise. You become emotionally invested in fewer trades. That concentration increases pressure. Pressure revives emotion. Emotion revives punishment. This is why even disciplined traders experience setbacks. Not because they became reckless, but because they forgot one critical truth. Neutrality must apply to wins and losses. Most traders learn to neutralize fear. Few learn to neutralize expectation. Expectation is the most refined form of emotion. It doesn't feel emotional. It feels reasonable, forward-thinking, responsible. But expectation bends perception. You expect a system to pay off. You expect a good streak after discipline. You expect patience to be rewarded. The market does not honor expectations. It honors execution, and execution without expectation is rare. This is where trading becomes brutally philosophical. You're forced to confront the idea that the market owes you nothing, not even progress. Progress is not guaranteed. Consistency is not rewarded immediately. Discipline does not come with a timeline. If you can't accept that, emotion returns, and the market resumes punishment. Now consider the trader who survives this stage. They stop reviewing losses emotionally. They don't search for meaning in every outcome. They don't tweak based on feeling. They don't require reassurance. They treat losses as data, not stories. They record them. They categorize them. They move on. No internal debate. No emotional residue. This doesn't make them indifferent. It makes them clean. Clean execution. Clean psychology. Clean statistics. The market stops punishing clean behavior because there's nothing to exploit. No urgency, no need, no attachment, just repetition. This is where trading begins to feel eerily quiet. You don't feel like you're improving, but you're not degrading either. Your equity curve stabilizes, your emotions flatten, and again, that flatness feels suspicious. Most traders misinterpret it as stagnation. It's not. It's insulation. You're insulated from emotional shocks, insulated from impulsive behavior, insulated from self-sabotage. The market punishes traders who mistake insulation for stagnation, because they tear it down looking for movement. Those who don't, those who endure the quiet, move into a different category entirely. They stop trying to be right. They stop trying to feel good. They stop trying to accelerate the process. They let probability breathe. That breathing room is where long-term profitability forms. Not dramatically, not visibly, but structurally. There comes a point where trading stops feeling personal. Not suddenly, not dramatically, but unmistakably. You notice it in small ways at first. A loss doesn't follow you into the evening. A win doesn't change your mood. You close your platform and your nervous system stays quiet. Nothing feels missing. Nothing feels gained. Just done. This is the stage most traders never reach, not because it's difficult, but because it's unfamiliar. For years, trading was tied to identity. It meant something about who you were. It reflected your intelligence, your discipline, your future. Now it doesn't. And that scares people. Because when trading stops being personal, it stops feeding the ego. It stops offering proof. It stops delivering emotional feedback. You begin to realize that the market was never interacting with you. It was interacting with your behavior. This realization strips away the last illusion. There is no relationship to repair, no opponent to outsmart, no approval to earn. Just a system responding to inputs. And systems don't care about effort. They don't care about struggle. They don't care about how long you've waited. They care about consistency. This is where the final emotional resistance appears, not as fear or greed, but as emptiness. You sit at your desk after a session and feel neutral. No pride, no frustration, no urgency. Your mind looks for something to latch onto and finds nothing. For emotional traders, this emptiness feels wrong. They think something broke, but nothing broke. What's gone is emotional dependency. You no longer need trading to do anything for you psychologically. And because of that, it finally does what it's supposed to do financially. This is where traders make a critical mistake. They try to bring emotion back. They think neutrality means disengagement, that they're becoming lazy, that they've lost edge, so they push. They take trades outside plan to stay sharp. They size up to feel alive. They watch more closely to stay connected. The market punishes this immediately, not harshly, decisively, because now the contrast is obvious. You can feel the difference between neutral execution and emotional interference. You see how even small emotional changes degrade quality. You see how attention narrows. You see how timing worsens. The punishment is clearer now because awareness is higher. And this clarity is uncomfortable, because now there's no mystery left. You can't blame the market. You can't blame the strategy. You can't blame conditions. You see the cause and effect directly. Emotion in, distortion out. Neutrality in, stability out. That's it. This is the point where traders either accept impersonality or walk away. Accepting impersonality means accepting that trading doesn't care about your story, your background, your sacrifices, your intentions. It only reflects your behavior. And reflection without judgment is terrifying to the ego, but freeing to the operator. Operators don't need meaning. They need repeatability. They don't feel insulted by losses. They don't feel proud of wins. They record. They execute. They move on. And the market stops punishing them, not because they're smarter, but because they've removed themselves from the equation. You don't feel like a hero anymore. You feel like a technician. That shift is everything. Technicians don't negotiate with systems. They maintain them. They don't argue with outcomes. They log them. They don't personalize failure. They adjust parameters. This is the moment trading becomes sustainable. Not exciting, not dramatic. Sustainable. Most traders never wanted sustainability. They wanted transformation. They wanted trading to change their life emotionally before it changed it financially. The market punishes that desire because it's backwards. Trading only changes your life after you stop asking it to. Once trading becomes impersonal, time behaves differently. You stop counting weeks. You stop tracking progress emotionally. You stop looking for signs. You just execute. And over months, quiet months, you start noticing something subtle. Drawdowns feel smaller. Recovery feels smoother. Variance feels manageable. Not because the market changed, because you did. This is the stage where punishment turns into feedback instead of pain. Losses tell you information. Wins confirm execution. Nothing attacks your identity. You're no longer inside the outcome. You're observing it. Observation is immunity. The market cannot punish what it cannot provoke. No urgency, no attachment, no need. This is where traders finally stop being tradable. Not in the market sense, but in the psychological sense. There's nothing left to exploit. And when there's nothing to exploit, probability finally works without interference. The final pieces of the puzzle don't arrive as insight. They arrive as quiet repetition, day after day, trade after trade, no drama. This is why outsiders think profitable traders are boring. They are. Because boredom is the absence of emotional leverage. The market punishes emotional traders because emotion is leverage. Remove leverage, and the system equalizes. At this stage, something fundamental shifts in how you experience time inside the market. Earlier, time felt oppressive. Candles moved too slowly when you were waiting, too fast when you were in a trade. Every minute carried weight. Every pause felt like delay. Now, time flattens. Sessions pass without friction. You're no longer measuring progress in hours or days. You're no longer asking whether today mattered. This change is subtle, but it's the clearest sign that emotional punishment has lost its grip. Because punishment requires urgency. The market can only hurt you when you want something from it now. When you no longer demand immediacy, the market has nothing to leverage against you. But this is also where a new danger appears, one that feels nothing like fear or greed. It feels like complacency. Not real complacency, but the idea of it. You start wondering if you're becoming too detached, too comfortable, too mechanical. You look at your calmness and question whether it's discipline or avoidance. This doubt is emotional, but refined. It doesn't scream. It questions. Should I be pushing harder? Am I settling? What if I'm missing my potential? These thoughts don't come from weakness. They come from conditioning. You were trained your entire life to associate effort with struggle, progress with friction, growth with discomfort. So when trading becomes quiet, your mind assumes something is wrong. The market punishes traders who misinterpret calm as stagnation, because calm is not absence of effort. It's absence of waste. Waste of emotional energy, waste of attention, waste of unnecessary decisions. Emotional traders burn fuel constantly. Neutral traders conserve it, and conserved energy compounds. This is where long-term survival quietly locks in. You stop needing to reset emotionally after sessions. You stop carrying trades into the next day. You stop reviewing charts to soothe insecurity. You review them to check alignment. That's it. Alignment replaces emotion. Alignment doesn't argue. Alignment doesn't negotiate. Alignment doesn't justify. It either exists or it doesn't. The market stops punishing alignment because alignment doesn't resist reality. Reality doesn't punish acceptance. This is the final psychological upgrade before true consistency takes root. You no longer measure yourself against outcomes. You measure yourself against behavior. Did you follow your rules? Did you manage risk? Did you avoid interference? If yes, the day is complete. If no, you adjust. Not emotionally, but structurally. This removes the last source of internal conflict. No more internal debates. No more self-blame spirals. No more emotional bargaining. Just feedback loops. Feedback without judgment. Judgment was always the source of pain. Judgment turned losses into insults. Judgment turned wins into validation. Judgment made trading personal. When judgment disappears, so does punishment, because punishment requires interpretation. The market never punished you. You punished yourself by interpreting outcomes emotionally. Now, outcomes are just outcomes. This is where traders finally stop leaking energy. They don't talk about trades emotionally anymore. They don't replay them obsessively. They don't need reassurance from others. They don't even think about trading as much. And paradoxically, this is when results stabilize, not skyrocket. Stabilize. Stability is the platform everything else stands on. Without it, profits are accidents. With it, profits are inevitable over time. This is where emotional traders become professionals, if they stay. Most don't. They leave right before this phase because it doesn't feel rewarding. There's no emotional payoff, no sense of arrival, just repetition. But repetition is where mastery lives. Not the exciting kind, the quiet kind. This is where trading stops punishing you because you stopped asking it to be something it's not. It's not therapy. It's not validation. It's not entertainment. It's a probabilistic system that rewards consistency and punishes emotional variance. Nothing more, nothing less. When you align with that truth, punishment dissolves. The market no longer teaches through pain. It teaches through feedback. And feedback is manageable. Pain is not. The final realization comes without fireworks. It comes one ordinary day when you close your platform, walk away, and realize trading didn't cost you emotional energy today. It didn't take anything from you. It simply was. That's the point where trading stops shaping you, and you start shaping how you interact with it. At the end of all of this, after the emotional spikes have faded, after the need for validation has weakened, after urgency has stopped dictating behavior, you arrive at a truth that most traders never articulate, but every survivor understands. Trading doesn't reward strength. It rewards stability, not emotional strength. Not confidence, not intensity, stability. The kind that doesn't react when nothing happens. The kind that doesn't accelerate when something finally does. The kind that stays the same regardless of outcome. Earlier in your journey, You thought trading punished mistakes. Now you see it punished instability. Mistakes were just symptoms. Instability showed up as overtrading. Instability showed up as hesitation. Instability showed up as changing rules midstream. Instability showed up as needing the next trade to matter. The market didn't care about the mistake. It cared about the pattern. Once your behavior stabilized, the market had nothing left to attack. This is where survival quietly turns into longevity, not success stories, not highlight reels. Longevity. Years in the market without emotional decay. Years of executing without burnout. Years of compounding without drama. This is the level where trading becomes invisible to the rest of your life. It no longer bleeds into relationships. It no longer dominates your thoughts. It no longer defines your mood. You trade. You close. You move on. That separation is not disengagement. It's mastery. Most people never want this. They want trading to feel important. But importance is the source of pain. The market punishes what you make important because importance creates pressure, and pressure deforms behavior. You can see this clearly now. Whenever you made a trade important, you interfered. Whenever you needed a result, you rushed. Whenever you cared too much, you distorted risk. The market punished every one of those distortions, not personally, mathematically. Now imagine the final internal scenario. You're watching price approach your level. Your plan says wait. So you wait. No tension, no urge, no internal commentary. Price either triggers or it doesn't. If it triggers, you execute. If it doesn't, you close the platform. There is no second guessing. Not because you're disciplined, but because there's nothing to question. You've already decided who you are in this situation. That's the final transformation. You're no longer deciding what to do. You've decided who you are. A trader who executes rules. A trader who accepts randomness. A trader who does not negotiate with emotion. Identity replaces willpower, and identity doesn't break under pressure. This is why emotional traders are punished and neutral traders are not. Emotion changes who you are from moment to moment. Neutrality stabilizes identity. Stability is untouchable. The market can exploit fear. It can exploit greed. It can exploit hope. It cannot exploit indifference to outcome. Indifference doesn't mean apathy, it means freedom. Freedom from needing today to matter. Freedom from needing to be right. Freedom from needing proof. And freedom is what emotional traders were chasing all along, just in the wrong direction. They thought freedom came from winning. It doesn't. It comes from not being emotionally bound to outcomes. This is why the market punished them. It wasn't denying freedom, it was forcing a lesson. If you want freedom, remove emotional leverage. If you want consistency, remove urgency. If you want longevity, remove identity from outcome. That's the equation. Nothing mystical, nothing motivational, just structure. This is the final fork. One path keeps emotion alive, keeps trading exciting, keeps outcomes personal. That path always ends the same way. The other path removes emotion from decision-making, removes urgency from execution, removes identity from results. That path is quiet and almost empty, but it works. The market punishes emotional traders because emotion makes behavior unstable. When instability disappears, punishment disappears with it. Not because you beat the market, but because you finally stopped giving it something to punish. When you look back at the beginning of your journey from this point, the contrast is almost uncomfortable. You remember how loud everything felt. Every candle mattered. Every tick felt personal. Every decision carried emotional weight far heavier than the money itself. Back then, trading felt like a test of character, a proving ground, a place where you believed success would validate something deep inside you. That belief was never wrong. It was just incomplete. Trading didn't validate you. It refined you. And refinement is a process of removal. It removes urgency. It removes ego. It removes the illusion that effort guarantees reward. It removes the belief that emotion has authority in probabilistic environments. What remains is not excitement. What remains is reliability. Reliability doesn't announce itself. It doesn't create stories. It doesn't inspire envy. It simply repeats correct behavior long enough for probability to do its work. This is where traders finally understand why emotional trading was punished so aggressively. Emotion introduces variance where variance cannot be afforded. When you were emotional, your behavior changed subtly from trade to trade. Your entries drifted. Your exits shifted. Your size fluctuated. Your patience thinned. None of these changes were dramatic, but together they destroyed statistical integrity. The market punished that integrity loss automatically. Not because you were wrong, but because you were inconsistent. Consistency is the only language the market understands. And consistency is impossible when emotion dictates timing, size, or frequency. This realization rewrites your entire relationship with effort. You stop trying to do better. You stop trying to push through. You stop trying to fix yourself. You simply protect consistency. That protection becomes your primary job. You protect it by trading less. You protect it by sizing smaller than your ego wants. You protect it by walking away when nothing is there. You protect it by refusing to negotiate with feelings. This protection feels passive to outsiders, but it is the most active form of discipline there is, because it requires saying no to yourself over and over again. Earlier you said yes to emotion because it felt productive. Now you say no because you understand the cost. The cost was never just money. It was clarity. Every emotional decision clouded perception. Every urgent trade narrowed focus. Every hopeful hold distorted time. The market punished that distortion by amplifying it. Now that distortion is gone. And without distortion, the market looks different. Not kinder. Not easier. Clearer. You see ranges without frustration. You see chop without irritation. You see losses without insult. And because you see clearly, you behave consistently. This is the final form of immunity. The market cannot punish what does not react. Reaction is fuel. Emotion supplies it. Urgency ignites it. Attachment sustains it. Remove those, and punishment has no mechanism. This is why seasoned traders often sound detached when they speak. They're not hiding pain. They've eliminated it at the source. Pain was never caused by losses. It was caused by interpretation. You interpreted losses as failure. You interpreted wins as validation. You interpreted streaks as meaning. Meaning is emotional weight. The market punishes meaning. It rewards neutrality. Once you accept that, trading stops feeling adversarial. You're no longer trying to win against something. You're executing within something, within a system, within probability, within rules. This shift removes conflict. And without conflict, there is no emotional charge. This is where emotional traders usually ask the final question. If trading feels like this, why do it at all? The answer is simple and difficult, because this is where it finally works. Not fast, not explosively, not impressively, but reliably. Reliability compounds quietly. It compounds without attention, without stress, without obsession. That quiet compounding is invisible to those still trading emotionally. They look for excitement. They look for stories. They look for proof. You look for alignment. Alignment doesn't feel powerful. It feels boring. And boring is the highest compliment the market gives. Boring means nothing is being forced. Nothing is being chased. Nothing is being defended. Just execution. This is why emotional traders burn out and neutral traders endure. Burnout comes from friction. Endurance comes from flow. Flow only exists when emotion stops interrupting process. The market punished emotion until it was removed. That's the lesson. Not because the market is cruel, because it is exact. Exact systems reject unstable input. Emotion is unstable input. Once removed, the system stabilizes. And when the system stabilizes, Time becomes your ally instead of your enemy. You stop racing it. You stop fighting it. You stop demanding results from it. You let it pass. And over long stretches, quiet stretches, you notice that the account grows, not because of brilliance, but because nothing is leaking anymore. No emotional leaks, no behavioral leaks, no psychological leaks. This is the end state most traders never imagine. Not triumph, not dominance. Sustainability. Sustainability is invisible from the outside, but it's unmistakable from the inside. You sleep well, you trade clean, you walk away easily, and the market no longer punishes you. Not because it changed, because you did. When everything finally settles, when emotion no longer tugs at decisions, when urgency no longer compresses time, when outcomes no longer carry identity, you see the whole journey for what it actually was. Trading was never trying to make you rich. It was trying to make you stable. Every emotional reaction was taxed. Every impulsive decision was billed. Every moment of urgency came with a fee. That fee was never random. It was precision pricing. You paid for fear with hesitation. You paid for greed with overexposure. You paid for hope with time. You paid for anger with damage you couldn't undo quickly. The market didn't punish you to be cruel. It punished you to be exact. Exact systems cannot tolerate unstable input. Emotion was unstable input. Once that truth becomes undeniable, everything clicks into place, not emotionally but structurally. You finally understand why nothing worked before. It wasn't the lack of knowledge. It wasn't the lack of strategy. It wasn't bad luck. It was volatility inside you. Internal volatility always leaks into execution, and execution is the only thing the market measures. Now imagine the final internal scene. You're older in the market, not by years, but by exposure. You sit down, open your platform, and there is no anticipation, no tension, no need. You are not hoping for opportunity. You are prepared for it. Price approaches your level. You execute without thought. Or it doesn't, and you close the platform without disappointment. There is no conversation in your head, no debate, no self-coaching, no emotional commentary, just action or inaction, both acceptable. This is what emotional traders never believe is possible. They think neutrality means detachment from success. It doesn't. It means detachment from noise. Noise was the real enemy all along. Noise made every decision heavier than it needed to be. Noise turned probability into pressure. Noise made time feel hostile. Emotion created noise. And the market punished noise because noise degrades signal. Once noise is gone, signal becomes obvious. Not exciting, obvious. And obvious decisions don't hurt. They don't exhaust you. They don't haunt you. They don't demand emotional recovery. You just move on. This is where trading stops being something you endure and starts being something you maintain. Maintenance doesn't feel like progress. It feels like repetition. But repetition is where edge compounds. Not dramatic repetition, quiet repetition, days where nothing happens, weeks where results barely move, months where the only change is internal calm. Most traders quit during this phase because they mistake absence of emotion for absence of growth. They don't realize emotion was the drag. The market punished emotional traders because emotion slowed compounding. Every emotional spike reset the curve. Every emotional spiral erased gains. Every emotional need interrupted flow. Neutrality removes interruption. And uninterrupted execution is unstoppable over time. This is the final truth. Trading never asked you to be fearless. It asked you to be irrelevant to outcome. Trading never demanded passion. It demanded patience. Trading never rewarded intelligence. It rewarded behavioral stability. If you were emotional, trading punished you because emotion made you unstable. Once instability disappeared, punishment stopped. Not instantly, not magically, but structurally. The market no longer had leverage, no fear to exploit, no greed to bait, No urgency to tax, just consistency. And consistency is the only thing that survives indefinitely. This is why most people disappear from the market. Not because they couldn't learn, not because they weren't smart enough, but because they couldn't tolerate the emotional silence required to stay. They wanted the market to feel meaningful. The market only wants you to be consistent. When you finally give it that, it gives you something far more valuable than excitement. It gives you time. Time without stress. Time without emotional debt. Time for probability to work uninterrupted. That was always the real edge. Not prediction, not timing, not brilliance. Survival without emotional decay. If you're emotional, trading will punish you. And when you're no longer emotional, it has nothing left to take.